All right, checking some vocals here. Looks like we are green. Kirk, hello. Let's go. Yeah, absolutely. Let's get rolling here. All right, so let me fade over here. All right, good morning. Good evening. Sorry, good evening, everyone. Kirk, good to see you. Hope you're doing well. Let me knock out a couple of things here real quick. Get my screen set up. Still getting back into town, so getting a couple of things ready. So this stream is good to go. And let's go here. And let's go here too. Okay, we should be good to go now. All right, so hopefully everyone's having a good time today and this weekend. Hope you had a fantastic weekend. I'm loading up my screens right now, so those should be loading anytime now. I think that we had a really crazy end of the week. As you all saw on Friday, we broke all-time highs for pretty much everything on all indices, whether it's SPY, whether it's Dow Jones, whether it's NASDAQ or QQQ, all of those broke all-time highs. So what does that mean now? That means that we continue this trend until we see large weekly displacement, like, higher time frame displacement, right? So we know that it's up to us to get a sense of where this thing could go all the way up until we see evidence of it heading lower. That's our goal. With all-time highs, inevitably there'll be retracements, but the worst thing, as many of you found out, the worst thing that can happen is if you try to pick a top, short it, and then just ultimately get squeezed out by a whole bunch of other people trying to get in too. Many of you felt that pain on Friday, so that's why we try to not pick tops. And that's why we look for really key things. And we'll look for those same signatures today, coming weeks, leading to the end of January, going into February. What's really interesting as well is if we see something on February generally is a bullish month for indices and stocks in general. So this is why I've been saying like a blow off top is a most likely scenario, because, and we're going to go into this over the charts in a second here, but because of what we saw with our various IFTA data ranges, what we saw with our quarterly projections, and we're going to take a look at the higher time frames today, mostly because that's what we're going to do for Sundays. We're going to focus on weekly prep. What can price potentially do? So let's go over to the charts real quick. And let me shift over to the charts over here. Okay, cool. Can everybody see that? Maybe I should probably check the stream to make sure it's actually able to be seen by folks. Okay, so there's a few people watching. That's good. So it looks like we're still live here. Okay, so this week, 2 weeks in particular, you want to be looking throughout the rest of the month generally to be able to see what's left, right? So this week, it's nothing too crazy. Something that you're used to is looking for red folders. Wednesday, flash PMI. Tuesday, Richmond's Manufacturing Index, but Wednesday, flash PMI. Thursday, unemployment claims, both early, in the morning, and then Friday, core PCE. So you're going to want to pay attention to those and keep those on your calendar, keep those times on your calendar, just as same as always, right? So let's go talk a little bit into, oh gosh, where is it? So I had mentioned that we are trying to figure out what does this all mean for future as we go into January, end of January and February, right? So knowing that our seasonal tendency for February tends to be bullish, and then we get to March and it tends to consolidate. Being that it is an election year, things can go awry to the upside very quickly, even if it's a consolidation time, right? So you have February being bullish, April being bullish, and then May, you've got that like May, June weird time there where it's like consolidating. And so early on this year, if it doesn't drop in January and we don't see evidence of it in January, we're likely to head higher. So LP trades, oh my, candles. Yes, these are God candles, absolutely. So, okay, so let's take a closer look at the futures contract now. So we're looking at NASDAQ's future contract, or micro NASDAQ, same thing, pretty much. So you can kind of see how price has traded in this month of January so far. So you can kind of see as it relates to some of the other months there. You can clearly see that it's been rising up to these monthly candle highs. So there's liquidity resting above these two candles. And where does that leave us, right? So note that from a monthly perspective, we traded down into this buy side imbalance, into this previous mitigation block, right? We traded to this mitigation block here, bounced up, and then traded back down to that bullish order block, coupled with this, well, this used to be an imbalance, right? So we rebalanced that imbalance and then headed higher on this month of January still. So we still have some room to go to the upside. What are our monthly levels that we potentially can look for? Well, this, like if you disregard this one and this one, this 17,491 level, this high should actually be labeled 17,702. I think it's shifted for the contract. 17,702. It wasn't always like that, but so now we have the correct data point there. Let me make sure these are correct. 17,589 high, 17,495 high. Okay, cool. So we have December's high, and then we have November's high, 2021. So this high is a long-term high. It's a intermediate term high that has intermediate term highs to its right and left, and this is a big one here. So this is the key area of liquidity I want to see us travel to, and then what happens there will tell us whether or not we are in for a nice long ride up higher in the month of February or not, right? So this month, we're looking for this month to continue to expand up towards that 17,702. What does that mean now, right? So if we know that we have this as a potential target here, yes, it can reach for the 17,589. I think it certainly can reach for that. It's already at 17,550, right? So basically, you've got price holding around this area, and let's go to the weekly to see what happens on the weekly charts, right? So remember, Sundays is weekly prep, so we're going to stay away from the lower time frame charts. We're going to stay most of our time on these higher time frame charts. So right now, we're looking at a weekly chart, right? So same chart there. Let me get rid of these swing projections here. It's a little bit cleaner. I have to go in and clean the lower time frame charts from the previous charting on Monday or on Friday. So with this here, so note that on the weekly, we have already begun to trade up and are now consolidating in Asia. We'll go down to a lower time frame just to show you that, but we're seeing that we've started to rise upwards in this month. In this week. This weekly candle is beginning rising up. Now, we can reach for 17,589. That can probably happen in London. You know, that's only 37 handles higher. But I do think that this 17,702. I thought this changed. That's weird. 17,702. Monthly. Should be on all charts. 17,702. There it is. Okay, cool. So looks like that has been updated there. So I think it still reaches for this high. And then what we want to see there is we either want to see initial retracement from there into this buy side imbalance to balance this price action out and then head higher. Like, I would like to see maybe it stop just short of it or blast completely through, and then we need to see what happens in the coming weeks, right? It's because a blast through of buy stops here could mean two things. One, if there's major displacement, it can come down to that displacement, bounce off of this long-term high as a mitigation block for everyone who is, like, short here. If it comes back down, they can buy their shorts all out at break even, and then that will allow for institutional order flow entry to continue skyrocketing this price higher. So that's what I'm looking for, is whether we see signature of a blow off top and then we retrace a bit and then head back upwards, or if we see just a wick up and then maybe a reversal pattern here, so that we can start to see if fair value gaps begin to form. If we start to see us trade way lower here, then that could be a potential shift. But I'd have to see it on the weekly chart, right? There's no short-term low higher than this on the weekly chart down here. So it's going to take a lot for it to get down there. And judging from the month of February being a bullish month, we are looking, even though we're at a premium, we are looking for new external range to be traded to. Right now, we are trading to internal range liquidity, trading it to it and through it, right? And we are looking to trade up through it into an external range liquidity, which would put us in uncharted territory. If that is the case, that is when we take a look at continuation, right? We look at continuation. We know that we hit a key level here. We want to see some continuation here. We want to see it potentially draw back down into this fair value gap area, buy side imbalance that's currently dynamic, head down to potentially this bullish order block and continue higher. I would like to see relative equal highs created, and I would like to see 17,702 not handled there. So that's on the weekly chart. Let's look on the daily chart where we have our range, right? So obviously these same lines are the same lines that you saw on the monthly and weekly, so no change there, no difference there. But let's widen these up and take a closer look, right? Okay, so chances are we won't need these lower lines yet. I'll keep them there for the time being, just in case. But so this is what our current chart looks like, and I actually need to get rid of a lot of these here. There's too many black lines from Friday's price action. Give me a second to remove them. Remove. Okay, a little cleaner there. Great. Fantastic. Okay, great. So when we're looking at the daily chart, we are looking at our IPTA data range projection. I believe this was January 2nd. So Gray, these lines, we see that all of our short-term highs have been traded to and through with this movement upwards, right? So all of our buy-side liquidity has been taken. Sell-side liquidity, we can see that clearly sell-side liquidity has not been taken yet. So, however, until we see evidence that we are going to truly see a break below an intermediate term low, then we are assuming that our trend will continue and potentially get to this high and consolidate as well. So those are the consolidation scenario, the break away and retrace to the mitigation block at the very high of our monthly chart. So this up here, if it breaks above it, if it breaks above this and retraces to this as a potential mitigation block, I would then take that as a potential to head long even more so. we're now longing in a territory where we're at such a premium. That's different. That's really difficult, right? It's because technically we'll be blowing through the premium external range liquidity if we reach 17,702. So, I mean, huge premium, but not to say that price range can't expand further. But I think that it's on its potentially on its last legs of a blow off top, right? I think that there's a lot of people that are FOMOing in, thinking, oh, you know, I'm missing the gains, all-time highs. There's going to be retracements here, and the key question is okay, well, one thing we have at the end of the month, if we take a look back at our economic calendar, the key thing that you need to be aware of is next week, FOMC statement on Wednesday. That's going to decide if we continue rolling higher or if there's a muted response on whether or not Fed's going to cut rates, or if there's an outright denial, then chances are this bull run's going to come to an end if there's some verbiage related to that. But if there's positive language and we start to see that rate cuts will happen, well, you all know, as you know, bond market goes down, we see that interest rates can go higher. If interest rate yields will go higher, then dollar will also go higher. If dollar is higher, that's not a risk on environment. Stocks will head lower generally. So all of these confluences, seasonal tendencies, quarterly bias, quarterly shift, if the data ranges, all those things I'm using to get a sense of, okay, well, there's probably a little bit more juice left in this, but not as much as people think, in my opinion. Famous last words, right? But I think that we end up playing the rest of this month out. And then if, depending on how the end of January looks, which would be roughly this marker here, January 22nd, it's a little bit, it's the 21st right now, but as we get closer and closer to the end of January and beginning of February, I will be looking for signatures on whether or not it busts above 17,702, comes back, retraces, and mitigates, or if it just busts above and we kind of just stay in a consolidation for quite some time because we're not sure which direction it's headed. So there's two scenarios. I don't think that there's going to be an outright reversal given the current nature of things, but I could be wrong as well. I mean, I'm not perfectly right on everything, but so those two scenarios I mentioned earlier, one being a blow off top, return to mitigation block, and then head higher, and the second being trade to the 17,702, maybe take that and then have to do, I don't know, something else. I think it's gonna, I still think it's gonna head higher, but we need to see what happens at 17,702. We need to see if it consolidates there and then runs higher, maybe further into uncharted territory. Are there catalysts that, like, you know, are people thinking, hey, it's still pretty bearish, like, you know, they're not sure? Or are they thinking, hey, this is a bullish idea, let's pile in now because we don't want to miss it, right? So I'm thinking that that's likely the case, is there's people that are just piling in and FOMOing. So yeah, I think that's, I mean, on a daily chart, you need to know where your swings are, right? So if all of my swings have already been taken here, the only couple of things that are left are a creation of short-term highs, retracements to OTE, and then continuation higher, right? So for now, I think in the coming week of January, again, like, January is generally a bearish month. It's just the weirdest thing to see price, how it's behaved in the past couple of weeks. It's very strange. So I think we continue heading higher. We might have a retracement, but I think we're going to continue heading higher as long as it's viable. So cool. I mean, I think that's it. I'm actually really, really toasted today. Super tired for some reason. Maybe I didn't get good rest or not, but let's look at some of the lower time frames and see how things are going. So as you can see, let's go to the 5-minute here. And there it is. Okay, so we started roughly around this area with movement and spikes higher. So I think that over London, there's a good chance we'll continue. Yeah, I think that's it for us though today. I don't see too many people. There's like 7 people on right now. Any questions from folks? Drink some water here. Okay. Doesn't seem like there's any really big questions from folks. So I'm going to let Asia and London play out. Be careful for the morning session. I mean, we had such a huge spike up that it's bound to consolidate a bit. So can still take plays from liquidity to intraday liquidity. That's probably as we get closer and closer to that 700 mark. Yeah, that one there. Want to move all these over. Okay, there we go. And that rejection block as well, last but not least, which you've already traded through. And I should probably move these over here because we already traded through those too. And this January high as well. Russell, thanks for the analysis, Johnny. Yeah. Appreciate you being here, Russell. So yeah, a majority of our time is going to be spent on the higher time frames here. Given our absolute tear of a week last week, you can kind of see here, the week began over here. We saw accumulation here, manipulation, right? Distribution, displacement, distribution. So we are nearing the high end of a market maker buy model. And so once we achieve this high, they'll probably see us blow through that and then start to accumulate. If that happens, that concludes the market maker buy model. And now we start to look for evidence of a market maker sell model begin to appear. So let's see. Any other time frames worth watching? No, these are just green God candles. So okay, so I think this is a pretty short one. You know where our bias is. Our bias is going to remain with the trend until we see otherwise, and we will continue to look for evidence during different sessions, like we see here, for example. We see that there's initial short-term low created here. We rally, we take that short-term low out, which is now meaning we are looking bullish. We grab more orders here, and we continue to head higher as that second stage, the second stage of that market maker buy model tells us. So we see we had this market maker buy model. And then, of course, on the weekly, we had this giant one, right? Market maker buy model on this one. Let's go see one more thing as well. I want to take a look at the dollar index. So let's take a look at the dollar index here. So from a monthly perspective, dollar index has been doing nothing but trading up to a fair value gap and bearish order block as well. So it traded up to this first one here, and right now it's in a little weird quandary area because it's at equilibrium. Right right where we are right now. It's at equilibrium, and we don't know, we can't tell if it's destined to head higher or destined to head lower, but it does seem like any movement higher has been met with swift reaction, I suppose. Yeah. So with the dollar index monthly candle, I think it could expand up into this again. I do think it can. So this would support a slight little discontinuation of a rally. On the weekly chart, we see that we had traded up into this bearish order block multiple times before heading lower. And what else do we have? Okay. So on the weekly chart, dollar, knowing that there's this draw on liquidity there, I think dollar still created a short-term high and a potential short-term high here. We don't know yet until they actually until we actually draw. We won't know for sure, but we have eyeballed this relative equal high up there for dollar to head higher. So I'm still looking at that to see if it's going to head higher above those relative equal highs, or is it just going to peak over that rejection block and continue its process lower. So I don't know yet. We need to see how Monday goes, and then we'll adjust appropriately for defining our which direction it's going to go and what is the absolute key draw on liquidity. So cool. So I think that's it for tonight. I think I need to get some sleep. You guys need to get some sleep. We're going to watch this as it goes into the day, and we're going to see if it wants to continue the pattern or use this as a true jumping off point and enjoying a trip. So maybe dollar is going to head higher. Maybe it will keep with this trend that it started, and I guess we'll see. So that's it for today, folks. Hopefully you have a good idea of where we are heading from an indices perspective, from a NASDAQ or QQQ perspective. So there's a few things that we're looking at, of course, but those you can find back in today's live stream. So, okay. So everybody, thank you very much for hopping on. Time to get some rest. I have a work week this week, which I will be going into work on Tuesdays and Thursdays, so I for sure will not be around those days. And on the other days, I will try to wake up early to see if we can find a 6 a.m. to 8 a.m. trade. So with that, everyone, thank you so much for tuning in. Really appreciate you having you here. And yeah, it's just a blast getting a chance to. I have a work week. See how price week, which I will be going into work on Tuesdays and Thursdays, so I for sure will not be around those days. Notice this on the other days with our weekly candle. To see if we can I am just saying that hey, we're at 17,544. Thank you so much for tuning in. Really appreciate you having you here. That there's room. Yeah, it's just a blast. There's room for unemployment. We take how price week 150 points higher than we are right now. Thursday, so I for sure will not be around those days. We'll head higher. No, notice this. Have to go. That's not good. Oh boy. All right, I'm back. Let me see if it says I'm back or not. That's not good. All right, there we go. So Breezeline sucks. There's my PSA. Don't go with them. Oh boy. All right, I'm gonna close up before my. All right, it's connected here. So sorry about that. So please let this stupid thing. Sorry guys, we got internet going in and out, so I think this is my cue to head out. Have a great evening, everybody. We'll watch Asia, we'll watch London, and see what occurs. So with that, I'm signing off, and we'll see how this all see some cool stuff in the coming weeks. So take care. we'll see how this all ties. See some cool stuff in the coming weeks. So take care. Have a good evening. Thanks for watching, and we'll talk soon. I'll see you bright and early. Take care. See ya.